Hey, how's it going, y'all? In this video, I'm gonna tell you how I backtest my ICT trading strategy. So every time before I start backtesting for the day, I will try to form a bias. So what I would do is I will try to do a top-down analysis from weekly time frame all the way down to 1 minute where I entry. So it's gonna be weekly, daily, 4 hour, 1 hour, and 30 minutes, 15 minutes, 5 minutes, all the way down to 1 minute. So it will be, the order will be like this. So we're gonna form a weekly bias first. Weekly bias is important because it gives you a framework for the daily bias. And the same is for 4 hour, the daily gives a framework for 4 hour, the 4 hours gives for 1 hour, something like this. And you might ask, how do we form this? Like, is it pure guessing? No, it's not. It's that we combine all of the things that ICT told us, which he told us fair value gap, order block, PD array, and premium discount, volume balance, liquidity, and etc. So all of these elements will help us to form a bias starting from weekly, and then we have the bigger picture. We can scale down to the smaller picture, and smaller picture in order for us to trade and execute on the lowest time frame. So we're on the chart right now. Today we're gonna backtest E-mini S&P 500 futures chart, and then we're gonna start from weekly to form a bias. So we can see last week is a large bullish week, and then we can see there's a weekly fair value gap above, so we're gonna mark it out. Weekly fair value gap right here, and we only mark out the portion that's not being rebalanced yet, so it's right here. And if the price go to the downside, in this case it's pretty unlikely because the last week the candle is really strong, so it can happen. But if it happens, it will be the narrow weekly fair value gap down here. So the bullish bias will be like this, and this week can be bearish too if the Monday, Tuesday create a weekly high right here and then starts going down later at the week. We don't know, so we're gonna see. If we go right here, we go to the daily, and then what we're gonna backtest is Tuesday, so we're gonna fast forward. The Monday is a small bullish candle. What we see right here, we saw a volume balance right here. We saw a daily fair value gap down here, so we're gonna mark it out too. There's a daily volume balance. Okay, so now we have a narrative. Our general bias for the first part of the week, let's say Monday, Tuesday, Wednesday, is that it is bullish because we kind of want to see the price gravitate towards right here, which is weekly fair value gap. Before this weekly fair value gap, we have another PD array, which is this daily volume balance. So in this case, I'll hide this to make our chart clean. So right now we have two bias. Either the Tuesday can create a low of the week like this, and then continue going up all the way to the weekly fair value gap, or the Tuesday can create a weekly high. Wednesday can continue going out. We don't know. Tuesday can go towards this daily volume balance. It's both possible, so we're gonna keep these two. There's a volume balance down here too, but in this case we might not gonna mark it out. So in the 4 hour, we saw the fair value gap was kind of overlapping with the daily fair value gap, so we might not gonna do anything about it. And we go to 1 hour. Again, overlapping fair value gap with the daily fair value gap. So what I would do is I'll mark up the midnight New York opening time, which is right here. Again, all of our time is based on New York time. What I would do is mark up the midnight New York opening price right here. So it will give us a idea of premium discount, idea of power 3. So in this backtest, I'm only gonna backtest the New York morning session, which starts at 8:30, but we're gonna start entering from 9:30. Through my backtest experience, 9:30 to 11 have the most highly probable setup. So we go to 8:30 and we mark up the new opening price too. We can see the price didn't really do a whole lot. It kind of consolidates around the new opening price and midnight new opening price. If we go down to lower time frame, mark up at 9:30 when we can start trading. That's where we saw the prices going up. And then if our daily bias is bullish, what we kind of want to see, the ideal scenario is the price goes down, going to discount at the London Asia session in 8:30 to 9:30, and then create a manipulation and then starts making a real move after 9:30. But in this case, the market is already in a premium, which is at the upside compared to midnight new opening and new opening. So what we want to see is a liquidity attack before we consider to enter. In this case, we see a clear trend line right here, and we saw a clear liquidity right here. So if we want to buy, we want to see the price goes down, take all the buyers out and trigger the sellers in, and then we're gonna looking to enter after that. And remind you, there's a new opening and midnight new opening down here too. So the price loves to retouch these two levels. So we're gonna see how it goes. So 9:30 opening, the price just dropped heavily, taking this sell side liquidity out, really close to new opening and midnight new opening. We kind of expect it to touch it, which it does. And there's another liquidity right here and another liquidity right here. We're gonna mark up this. So what I would do is I will mark up the range of 9:50 to 10:10, because these are the time that a lot of time the market would do a major move at this time range and would do a market structure shift, and that will create a lot of great opportunity to enter. So in this case, the market take out this sell side liquidity again, rebalance this volume balance, and we can see there's a volume balance down layer 2, which it rebalance it to. Then the market starts going up. In this case, this is enough for us to start looking for bullish entry, because it takes out multiple sell side liquidity. It goes to discount compared to new opening and midnight new opening, which, you know, right here. And yeah, we can start looking for buying right now. And I only trade ICT breaker structure. A breaker structure is when a bullish breaker structure is when the price creates a low, creates a lower low, and then creates a higher high. When the market retraces back to this last high range, this is where we're looking to enter to the upside. So in this case, we can see a potential breaker is forming a low, a lower low. Let's see if the market wants to break this structure high. So we go into a 950 to 1010. We're gonna look close to see what the market is gonna do and do a violent breakthrough through this buy side liquidity, do a market structure shift right here. And right now we are trying to enter because, you know, it's kind of a big, large bullish breaker structure. we'll kind of go into the higher time frame. We're gonna see a low, lower low, market structure shift, and we're gonna mark up the breaker candle range. Because this is quite a large ranging breaker, we're gonna mark up two bullish candles for the range. And then we're gonna enter when the market retouch this range. And then our stop loss will be plus 1.75 down here. And our target will be all the way up to this daily volume imbalance right here. So we're gonna see how it goes. Market retouch at this candle at 10:06, retrace violently into our drawdown. And because I want to simulate the real-time market condition, so if you try to enter right here, because of the spread, commission, whatever, your real entry might be up here. So you'll be a little bit more in drawdown. So let's see if the market respect our stop loss. So the market retraces back to a small fair value gap down here. You start retracing. We're still in large drawdown, but we will trust our setup. And then eventually the market starts going up, and then hit our take profit. But right now, what I'm only doing is try to aim 1 to 2. So in this case, it'll be around right here. And I will move my stop loss to 50% when the market hits 1 to 1. And move my stop loss to break even when the market hits this level. So yeah. And what I would do is I would do a tax analysis to see how the price market perform. So we enter at 10:06. It's a bullish breaker, and the narrative is in the place. It's an A setup. It's a clean breaker setup, bullish breaker setup. It is trading with the daily bias and trend, and it do have an obvious liquidity grab right here. PD array above have the strong incentive for the price to hit it. Consider the time left. Yes, it does. We have around 54 minutes until 11 o'clock, which is lunch time of New York session. So 1 hour is more than enough for it to goes up to this level, which is, yeah. Is this trade likely to be a starter move? Not really. Weekly buys can be bearish right after the price hits the weekly fair value gap above right here. So yeah. And then we're gonna mark up the against factor. The buys can be bearish, we can be wrong, because the market already goes up for quite a long time, and there's a 1 hour fair value gap down below. The market can easily retrace this back to there. It's a really clean fair value gap, and there's a lot of liquidity down here too, sell side liquidity down here too. So yeah, weekly our daily buys can be wrong. Yeah. And I'm gonna collect data to see tightening stop loss is probable. In this case, it's not. If we place our stop loss right here, we're being stopped out because of the spread. So yeah. And then we're gonna keep seeing how the market perform to 11. So the market completely fulfilled this daily volume balance. And then we go to the lunchtime, and we can kind of quickly take a sneak peek what happened in the lunchtime. The market kind of consolidates around this range, go up again, rebalance the daily volume balance, and starts going down. So yep, that's what I would do to backtest a New York morning session. Hey guys, so that's basically it. If you have any questions, feel free to shoot me a DM on Instagram or comment in the comment section down below. and I'm looking forward to make another video on daily bias. If you want to see that, make sure to drop a fire icon down in the comment section down below, and I will see you in the next video. Let's get it.